If you're a real estate agent, a real estate broker, a realtor, a real estate developer, or whoever you are playing in the real estate sector as a professional, then this particular video was specially made for you. And as a matter of fact, in this video, we want to talk about real estate tax in Nigeria. And if you are really serious about playing in the real estate sector in Nigeria sustainably, then this is one video you should not joke with. I'm going to give you the background of why we are having this conversation, as well as make a proper introduction of our real estate task course here at the Fortreal Real Estate Academy. My name is Raymond Ijama, and I am the lead facilitator of the Fortreal Real Estate Academy right here in Nigeria. And today we have a special guest. He's not just a special guest to this conversation, he's a special guest as a lecturer at the Fortreal Real Estate Academy. He's our tax lecturer at the academy, and we're privileged to have him join us today. And I'll allow him introduce himself because his surname is very hard for me to pronounce. So please, let's hear you.
All right, thank you so much, Mr. Raymond. My name is Tehumba Tepav. I'm a chartered accountant and a consultant.
Tehimba Tepav. All right, so that's him. Simple man, but he's made of a lot of stuff. I wish I can introduce him. In fact, in our task course, while I was doing an introduction of him and reading his bio, I almost felt like I was intimidated, to be honest. I'm just a simple lawyer, real estate broker, doing my thing, all right? But Tehimba is a great person, and here's the background to the real estate task course. So as a trainer, training real estate professionals, training agents, and training real estate companies, I have over the time, particularly while I was training real estate companies, I have over the time found out a lot of mistakes, task mistakes that real estate companies are making, real estate agents. In fact, the day you register your business, the day you register your company, and you are operating as a real estate agent using your company account, whether you have a physical office or not, you are already responsible. In fact, you are already part of the people who are meant to be paying tax, and it is serious. So you don't have to have an office for this to be serious and seriously applied to you. So in one of these trainings I was having with a real estate company, the guy told me what he was doing, and that was a major mistake as far as tax is concerned. And this person was going to, I know for a fact, that he was going to be using almost all of his commission to deal with the problem he has created, the tax problem he has created. And coincidentally, I have another real estate friend and developer who was fined over 150 million naira in 2024. And Tehimba is the person who is solving that, or has even solved that problem already. And that speaks to his expertise as far as it concerns tax issues here in Nigeria. And it's on the basis of these issues that I felt that it was extremely important that we bring in a task course into our academy, because what we're doing is to make sure that you don't just know how to sell consistently, you also know how to deal with problems or avoid problems, avoid real estate challenges, avoid tax challenges, avoid issues with EFCC. That's why we also created the real estate task course. The government regulations and compliance course. So beyond selling consistently, we're also positioning ourselves to ensure that you are properly taught how to manage your business sustainably without having heavy fines that can crash the business. So Mr. Tehimba, having laid the foundation for this conversation, could you kindly run us through certain mistakes we should avoid, real estate persons, real estate agents should avoid in the course of selling real estate?
All right, thank you so much, Mr. Raymond, for the wonderful introduction and the brief of what we're having to discuss here. One of the major mistakes most players in the real estate do is, the first thing they do, they tend to run away from tax. Right, and tax is something you cannot run away from. Tax is something you cannot run away from. You understand? When you get to register your company, go to the tax office and create a tax file. Right, then it's more important that you comply, because they say compliance is cheaper. If we even tend to move towards,
wait. When you are dropping bombs, you have to make sure that you're allowing us to digest. He said compliance is cheaper.
Yeah.
All right. So go on from there.
So yeah, compliance is cheaper, because when you get to register for tax and then become intentional about compliance, you see that over the years, if you calculate your tax you have paid, you see that it's even lesser compared to a case where you are slammed with penalties and interest over the years cumulative for you to pay. And one thing you should know that even if you don't register for tax, you can't run away from the government. The government have a database and they have a special torchlight that they can fish you out from anywhere you're hiding.
Special torchlight.
And fish you out from any hole you are hiding. So I advise that when you register your company, just go ahead and register for tax. There are some incentives and there are some loopholes that you can capitalize on to be able to pay lesser taxes. I think that is the way to go rather than running away from the tax net. Because when the government gets to hold you, they are going to use what they call BOJ, best of judgment, to assume your taxes, and that becomes a very major problem when your taxes are assumed. Because of course, you are already a defaulter. So no matter what you do, they are already seeing you as a defaulter. So the right of fair hearing will not be so given to you.
You are at their mercy automatically.
Of course, you are at their mercy automatically. So you have to do a lot of things to be able to get to play properly. And then another mistake real estate players, right? People who operate in the real estate make is the common misconception of value-added tax. You know, a lot of people within the real estate sector, a lot of companies within the real estate sector feel that once you are registered as a real estate company, you don't pay tax. But then that's a very major. You don't pay. You don't pay VAT. But that's a very major misconception, right? Because of course you don't pay VAT on purchase of properties, but then there are other services within the real estate sector that are VATable. They are VATable. Services like, for instance, you have to pay an architect. You have to pay if you are a surveyor, if you are a valuer. All those services around the real estate are VATable. Just the purchase of property. And then even the purchase of property up to now was not accurately stated in the tax law that no property should not pay VAT.
Yeah.
Right. The reason for it is property does not fall into the classification of goods or services stated in the tax law as exempt from VAT. So we capitalize on that loophole to say, okay,
it is not.
Property is not movable as based on the classification of goods, and property is not a service. So as of that loophole, property is not VATable. But then the new finance bill that is currently in the National Assembly, the new tax bill, is currently in the National Assembly, captures the part that property is not VATable in clear terms. So when the new tax bill is out, that will be addressed. And then there is another point we need to note, very important. You know, players around the real estate sector, what they do is most times you just get to receive money, principal, and then your commission, of course, for purchase of property. There are tax incentives around tax, right? Tax gets to state that there are small companies, medium companies, and large companies, right? If you do below 25 million, then you are a small company. If you do up to 100 million, you are a medium company. If you do above 100 million, of course, automatically you are a big company. And then there are applicable tax rates.
So let's put clarity to that. Now, as far as government is concerned, the moment 25 million enters your account, right, and it doesn't exceed 25 million for that 1 year, then automatically you're a small company. The moment it is above that, then you're a medium company.
Of course.
Then once it is 100 million and above, as far as government is concerned, and the tax officers, the tax institution is concerned, you are a big company. And you are meant, your tax increases by virtue of that. Now, you can sell a property of 100 million, and automatically by that singular transaction, you qualify as a large company. And you also qualify as somebody who will pay bigger tax. You can go on, sir.
Of course. Thank you so much for that wonderful explanation. Of course, that's how it plays. So let's take a scenario where you receive money from a client, right? Let's use 100 million. You receive 100 million for a client to purchase a property, right? The client pays to you to pay to the owner of the property. The property is not yours. You're just the middle person, the
agent.
Of course, the agent, right? That's the right word. Thank you so much. Of course, you are just the agent, and your commission from that is just 10 million naira. And you receive the whole 100 million in your account. The tax officer are looking at you as a large company already. But let's take, for instance, where you receive just your commission of 10 million. Of course, you are not even up to the 25 million to pay tax. So your tax will be 0% when it comes to company income tax. You know, there are different taxes. When it comes to company income tax, you are paying 0% because you receive 10 million that is just only your commission. But when you get to receive the whole money, okay, just send to me, I will buy the property for you.
Especially when realtors, you don't want the money to go to the developer or the
Yes,
person selling, so that they
yes,
will not go fight about the
yes,
commission.
yes.
So you're not okay, let me collect the money.
Yes.
I haven't collected the money, you collect tax while I drink.
Of course, you have to also take charge of the taxes. And then there are many other points I can go ahead on and on and on to list. So let me even say this. When, as a real estate player, when you are making payment, because let me say this, real estate industry is a hot spot in Nigeria. It's a hotspot in Nigeria because the government's eyes are on real estate industry, the EFCC and the EFCC, Security and Exchange Commission, everybody's eyes on real estate because it's assumed that players in real estate have to do most times with money laundering. Let me not say it loud. You understand? Money laundering.
If you know, you know.
You know. You understand? So when you are making payments or you are making transfer out of your account, it's very important that you put appropriate description, because if you don't put appropriate descriptions, you will still run into a lot of challenges, because the government, the tax people will come for you, and when they come for you, there's what they call add back. You know, when you want to pay taxes, right, there is your turnover, which is your revenue, less your allowable expenses. But then if there is no appropriate description, let me come again, your revenue less your allowable expenses, then you get your profit. So the percentage tax is applied on your profit. You understand? So let's take, for instance, your descriptions are not clear and the tax office decides to add back those expenses you removed. Of course, your tax will still go high.
Yeah.
So it's very important that we also take into cognizance the description when we are making transfers out of our account. It's very important. It's very, very important. And then there is another point of withholding taxes, right? You know, a lot of developers buy materials to develop, let's say, a site or develop an estate, and they just keep sending money without withholding taxes. There are two coins to this particular case of withholding tax. There are two sides of the coin, right? There are two sides of the coin to this particular withholding tax. What happens is, if you fail to deduct withholding taxes, like, okay, let's say we want to buy irons, we want to buy cement and other things that developers use to develop a building, and you fail to deduct withholding tax as 2%, basically now, as you know, tax laws evolve, but basically now it's actually at 2%, then you are getting to pay that money to the government, right? You are getting to pay that money to the government. And then there is a clause around withholding tax based on the new Withholding Tax Regulation Act that came out not too long ago. If the company or the company you are buying from does not have a TIN, which means, of course, they're not registered with the tax office, you are supposed to deduct *2. For instance, if you have to deduct 2%, you are supposed to deduct 4%. If you have to deduct 5%, you are supposed to deduct 10% *2. So let's make an assumption where you fail to deduct, so you are the one paying the *2.
Ladies and gentlemen.
You are the one paying the *2. You understand? So that is another area we need to also look at around the real estate sector. It's very, very important.
Interesting. Now, there are a lot of scenarios around this, and if you're really playing in the real estate sector, you will know that there are a lot of examples around everything we're saying right now that you may have fallen short of. You've fallen short of the glory of government. Right? And this is quite serious. To be honest, this is really serious. And just as he's saying it in my head, scenarios are just pumping up in my head. And these things are avoidable.
Yeah.
You can avoid them. And by knowledge, you can absolutely avoid all of these task issues. Is there another one you want to add for us today?
Well, for now, I'll just keep, already I can perceive the viewers' thoughts. I can see their heads are already going up in flames. So for now, we can just hold on now here, and then in subsequent editions, of course, there are a lot of tax issues and scenarios we can bring up that can help them to be able to ensure their taxes are in check.
And like I mentioned, these issues are avoidable.
Yeah.
And as I mentioned when we were creating the task course, having drawn out different practical real-time scenarios that play in the real estate sector, we needed to create a solution around them and how to avoid them. In fact, I remember the scenario we did about when you want to build for your client. For example, your client is sending money,
yeah.
hundreds of millions to your company account to build for the client. If you're not careful, the profit that is meant to go to your pocket will end up going to the tax officers or institutions.
And even more.
And even more, right? So this is quite serious, and that's why, as an academy that is intentional about creating value to all of our audience, all of our students, we decided to create the real estate task force. In fact, from my background as a lawyer, property lawyer, and having played in the real estate sector for a while, I also know, which is also the reason that gave birth, or what gave birth to the real estate law course, as well as the government regulations and compliance course. In the real estate sector, you can make a lot of money. You really can make a lot of money. But when government comes after you, and sometimes legally, really, because these are certain things that we all have to do. It's just that a lot of us are ignorant, and sometimes you hear phrases like Nigeria get law, now enforcement with the problem.
They did a crackdown on you, there is full enforcement.
Until the day they come for you, I mean, and for me in the real estate sector, enforcement happens.
Yeah, of course.
Because
always.
There's a lot of money involved. Government needs money, and they know they can get it from you, knowing that there's a lot of breaches and failure to comply or generally comply with the regulatory requirements within the Nigerian sector generally. So, ladies and gentlemen, that is the conversation. Just in case you're interested in going for the full course is 5 modules and then practicals. All through the modules, we have all of these conversations: VAT issues, personal income tax, withholding tax, when to file, when not to file, how to avoid this, how to avoid that. All of that were comprehensively dealt with in the real estate task course. And in addition, there was a practical, 4 practical sessions that shows you how to file all of these taxes, and some of them you can find from the comfort of your home and in your office. All right, so if you're interested in the real estate task course, the number to reach out to is right on your screen. Other courses that we have at the Fortreal Real Estate Academy include the 100 real estate Q&A course, the 7-figure marketing and sales course, the real estate law course, the real estate task course, government regulations and compliance course, and of course we'll keep improving. The moment we see a problem, we create a solution around it, and of course create a course around it. Ladies and gentlemen, thank you, Mr. Tayimba, for
thank you so much,
joining us, and thank you for agreeing to be a lecturer at the Fortreal Real Estate Academy.
Thank you so
such
much.
a privilege to have you on board. Most importantly, having somebody who understands the practicalities of solving the problems beyond just the theoretical knowledge of telling you what to do and what not to do, and all that. So, ladies and gentlemen, thank you again for joining us, and see you on the very next video. My name again is Raymond Ijoma, and I am the lead facilitator of the Fortreal Real Estate Academy. I'll see you on the next one. Bye-bye.
Bye.